Welcome to the fifth and final episode in our ongoing series around crypto market valuation. In this series, we attempted to describe an approach to market entry and market exit when investing in cryptocurrency for this market cycle. Now, in broad terms, the strategy that we've adopted can be extended to future market cycles, but the information that we used is specific to this market cycle. In this episode, we will aim to wrap it all up. So we covered a lot in the previous 4 episodes that really sort of helped us set the scene, described our assumptions, and sort of laid out in technical terms the things that we'll be looking at to help guide us as we navigate the ebb and flow associated with investing in crypto. So if I can just very quickly recap the previous 4 episodes. In the first episode, we laid down the foundation for our analysis, and that's really that everything is based on Bitcoin. Okay, our premise is that where Bitcoin goes, the altcoins and the market as a whole for cryptocurrency will follow. Okay. We then also attempted to look at different scenarios for Bitcoin and settled on the most likely scenario being that Bitcoin is going to play out into this digital gold or gold 2.0 over the medium term. So with that in mind, in the second episode then we looked at 2 pricing theories to see what will happen or what we think may happen with respect to Bitcoin's price as it evolves into this digital gold narrative. Okay, and we covered 2 theories. One was called lengthening cycles and diminishing returns theory, and the other one was called the stock to flow cross asset model theory. The lengthening cycles, diminishing returns approach is a little bit more conservative, and we anticipated an approximate market top of around $150,000 per Bitcoin for this market cycle, whereas stock to flow predicts a more optimistic view where an average Bitcoin price of around $300,000 per Bitcoin was estimated. I think we concluded at the end of that episode that it's hard to say which of the 2 models is sort of going to win out by the end of this crypto market cycle. But for now, it appears that the stock to flow cross asset model is the one that's likely to play out, though it is something that we are monitoring. In the third episode, we then looked at different Bitcoin indicators to help us predict market top. So although we've got these 2 pricing models that I just described, there are other indicators that we could use, so-called on-chain indicators that will give us an indication of market top based on what's actually happening on the blockchain. And the 2 indicators that we focused our discussion on was the net unrealized profit and loss indicator and the thermocap indicator. In the 4th episode, then we switched gears. So in the first 3 episodes, we established a solid foundation for our premise around understanding Bitcoin. And then in the 4th episode, we looked at altcoins. And the approach is a little bit different for altcoins when compared to what we're doing for Bitcoin. So in that episode, we had a quick overview on market psychology as a generic model. We then applied that model to the cryptocurrency market as a whole, and we attempted to lay out this 5-phase model for what we expect with respect to cryptocurrency as it pertains to market psychology. Okay, and then we wrapped that all up with a description of our fundamental analysis approach to developing a greed and fear index. Okay, so all of those elements by themselves maybe may seem a little bit overwhelming, but there is a way in which we've put it all together and, in a summary form, so that at a glance we can sort of determine where we are with respect to the crypto market as a whole, and then using that information, it will allow us to take action. Okay, so before I go on, I have to do the standard disclaimer. The information that we're about to share with you does not constitute investment advice. As you know, investing in any asset class, but in particular cryptocurrency, which is probably a little bit more volatile, does come with risk. So any reliance on the information that we share here is purely at the user's own discretion, and they assume all responsibility and risk associated with that. I will also add that in this particular episode, I'm outlining my approach to market exit using these indicators. Now, this is based on my risk appetite. I will add that there are others in our crypto group who are also using the indicators, but they're not necessarily following my strategy. Okay, so there is no one size fits all here. You've got to determine for yourself what's appropriate for you based on your individual circumstances. But hopefully the information that we share gives you a basis for making those kinds of decisions. I'll also add that in the previous episode, we indicated that we weren't going to use technical analysis. We took a little bit longer to get this episode out because one of our members in the group is an avid TA person, and he recommended that we make an attempt to use TA. So we've done that, and I will summarize how we use TA in our dashboard in this episode, but it is our plan for future episodes to introduce these concepts in a little bit more detail, so we'll be creating a separate series for that. Finally, I would like to then add that if you do find this information interesting, we would appreciate a like. And of course, as I've just hinted, we plan to release future episodes on other topics relating to investing and crypto. So I would encourage you to subscribe if you are interested in receiving that content, as it comes off hot off the press. Okay, so with that said, let's dive into this episode. Okay, so how are we going to go about the discussion today? Well, it's going to focus on two things. I'm going to spend a little bit of time talking about our crypto market indicator dashboard. And the dashboard is really a tool that we use to summarize everything that we've discussed up until now. Okay, it's there for us to view at a glance. It's easy for us to update. And based on the updates and the discussion around our interpretation of the indicators, it then prompts action if action is required. Okay, so I'll be talking you through how that works. Then, although not necessarily directly linked to the dashboard itself, I thought some of you may be interested in portfolio performance to date. So I thought I'd share with you how my portfolio is performing. There are other members in our group. Their portfolio makeup is not necessarily 100% identical to mine, but they are also enjoying similar performance. Okay, and that will then close this series. So by now you probably realize I'm a fan of quotes by famous people. So in keeping with the previous 4 episodes, I've got a quote again for this one. And this is by former US president and the military head for the Allies war effort during World War II, Dwight D. Eisenhower. And he had to say this about preparing for battles or battle planning. Okay, and he said, in preparing for battle, I've always found that plans are useless, but planning is indispensable. So this might seem a little bit odd, okay? If you're not going to use the plan, why bother planning, right? And I think he makes the point, right? It's the process. It's what you learn through the planning exercise. And also, when the bullets start to fly, plans really go out of the window, because things become chaotic and things that you didn't anticipate manifest. So sticking to the plan may not necessarily be the best thing or the best course of action. Okay. However, what you learn going through planning becomes indispensable in those situations. Okay. There are things that you cover in detail that may not necessarily be valuable to the task at hand, but what you have in terms of knowledge and background and experience allows you to make better decisions. So that's really the point of the cryptocurrency market indicator dashboard. We spent a lot of time putting all of this together in preparation for the bull run for this crypto market cycle. Now, we'd like to think that we know how that might play out, but the truth is nobody can predict the future, okay? And there are things that may happen that would take all these indicators and all our assumptions and throw it out of the window. But hopefully, we are a little bit better prepared than investors who haven't taken the time to plan. Okay? So the dashboard gives us a means in which to organize our thoughts, maybe look at the market in a less emotional manner. I'd like to say unemotional, but when you got skin in the game, when you got things at stake, it's hard to keep your emotions out of it. But at least there's objective information that you can refer to help you make decisions, when the emotions are flaring. Okay, so how does the dashboard work? Well, as you can see, there's a lot. It depicts a lot of information. Okay, I'm going to talk through it in summary first and then go into a little bit more detail. So in the top third of the dashboard, you can see our greed and fear index. That's our altcoin market sentiment indicator. And next to it is the overall market cycle evaluation, right? The five phases of the crypto market. Then below that, we have all our Bitcoin indicators along with their respective targets. So you see the net unrealized profit and loss graph, the thermocap ratio graph, and then the stock to flow cross-asset model graph, which I've pulled from Digitalic's website. And then below that is a little discussion box, and the discussion is broken up into our discussion around Bitcoin first, because as you may recall, I said our premise is we look at Bitcoin first, and then based on what we see happening with Bitcoin, we then look at the altcoins. So Bitcoin is discussed first, and inside that discussion, you will now see that there's a little bit of analysis, a little bit of technical analysis. Okay, we've introduced that recently at the recommendation of one of our members, as I had said, and the reason why we've done that is we found that the on-chain indicators sort of give us really good data for broad trends that happen over maybe week-long periods, but the TA can allow us to get indications of what might happen in terms of hours or days versus, as I said, the on-chain indicators, which kind of favor, views in weeks. Okay, so we've introduced that. And then below that is our discussion around altcoins, and that is primarily focused on our greed and fear index and what it's saying, but also, and you'll see that in the top right-hand corner of the dashboard is where we are with respect to Bitcoin dominance. Okay, so that's the dashboard as a whole. I will also add, perhaps at this point, that it is our plan to make this dashboard freely available to anybody who's interested. We will be providing details at the end of this episode or in the comments on a Signal group. If you subscribe to that Signal group, you will receive on a weekly basis this dashboard with updated information. So if that's something you're interested in, we welcome you to joining our group, and you will receive that, as I said, on a weekly basis. Okay, so how do we use the dashboard? Well, the first thing we look at is our position in the overall market. So in the top third of the dashboard, we have the 5 phases of the crypto market. I discussed this at length in the 4th episode, so I'll encourage you, if you're coming into this cold, or maybe you've forgotten a bit about what we've discussed there, is to go back and look at this, because really this sets the foundation for action that we will take. Okay, so we described the 5 phases previously. Where we are at the moment is we've completed phase 3 and we are in phase 4. Okay, so understanding that, what do we do? Well, the first thing I'll add is I'm not entertaining any profit taking until the market has fully established itself in the 4th phase. Okay, so in other words, I want the altcoin bull market to mature. Taking profit before then may be fine for other people who have a different risk appetite for me. So I'm not saying that is wrong, but I'm wanting to take a little bit more risk. And the way that manifests is the altcoins will pump. My view is that the altcoins should be allowed to pump a little bit more before one looks at taking profit. Okay, so once the 4th phase is established, then we can take some action. Now, how do we know if the 4th phase is established? Well, for me, the primary indicator there is the Bitcoin dominance index. Okay, and what I'm looking for, and this is based on previous market cycles, is a Bitcoin dominance of around 50% or less. Okay, there's only one problem with this. It may not play out that way. And the reason why I say that is because maybe in the previous market cycle, the technology revolution was all about smart contracts and all the ICOs that went with that, right? So Bitcoin, to some degree, although it was still the market dominator, as the market matured, it started to take a little bit of a back seat as speculators piled into all these ICOs, as they were looking for like the next best thing when it came to blockchain technology. Now, Bitcoin in this market cycle is part of the technology revolution. As you may recall, I indicated what's changed for Bitcoin in this market cycle versus previous market cycles is that Bitcoin is now seen as digital gold by the market as a whole. That whereas before institutions, maybe sovereign wealth funds, certainly Fortune 500 companies, they weren't really looking at Bitcoin as an investment class. It was seen as investments for perhaps the retail market and hedge funds that were perhaps had an appetite for speculative assets. That's completely changed for this market cycle. So it's almost as if the world has woken up to Bitcoin, or is waking up to Bitcoin now. And that means that it's part of the technology revolution. So when it comes to the dominance index, it may not be in this market cycle that Bitcoin will go below 50%. Or if it does happen, it will happen very late in the market cycle. So in other words, phase 4 and phase 5, it's possible that it could be one phase. Okay. So while I'm looking at the Bitcoin dominance index, I'm not ignoring the indicators that I'd be looking at in phase 5, okay, which is the thermocap and the net unrealized profit and loss indicator. And those, as I said, those are the ones that would indicate market top for Bitcoin, and therefore by extension market top for the the cryptocurrency market as a whole. Okay, and I guess the other thing to add about that is it is therefore then possible, with all of this in mind, that our greed and fear index for altcoins could flip to greedy before we've reached a Bitcoin dominance index of less than 50%, and before our net unrealized profit and loss and our thermocap reach their respective targets. Okay, so what does that mean? Well, I'm not taking any action on the altcoin market sentiment indicator until I receive confirmation that we are approaching market top for Bitcoin. Again, this goes back to the premise. We look at Bitcoin first. What Bitcoin does then informs what we do next with altcoins. Now, that's not a criticism of the altcoin market sentiment indicator. Again, if you remember what we said in episode 4, when we developed the altcoin market sentiment indicator, we said that we will set price targets based on fundamental analysis for all our altcoins that are conservative. So in a way, we would expect our altcoin market sentiment indicator to flash greed early. Okay, that shouldn't be something that should be unexpected. Of course, when that happens, we do keep our eyes on the market on a daily basis, because it's probably an indicator that things are unfolding at a rapid pace. Okay, just some other personal comments with respect to what I'm doing at the moment and market entry. I'm not buying any more Bitcoin at this point, but that's only because my levels of exposure based on my risk appetite, I see as high enough. Now, if I had no Bitcoin at this point in time, I would probably still buy. Okay. So that would be something to consider. The other thing to add is that I'm not all in when it comes to investing in Bitcoin and crypto. This is clearly an attractive investment class to be in right now. But if you go back to episode 1, there are also very real risks. And these may be realized. It's not impossible, okay? Unlikely perhaps, but not impossible. And if those get realized and one is all in, as they say, it could be devastating. Okay, so my risk is therefore spread to other asset classes as well. Then the last thing to add is I consider not being in Bitcoin right now as a greater risk than buying Bitcoin at this point in time. Okay, having no exposure at all to Bitcoin is, in my view and opinion, a greater risk than spending money buying Bitcoin right now. And the reason why I say that is basically based on what is going on in the global macro environment, okay, where governments are tripping over themselves to devalue their currency via money printing. It appears anyway that Bitcoin is an excellent sink for that. So having just a little bit of exposure to Bitcoin means that you have a hedge against rampant currency devaluation. Okay, right. So what will I then be doing once we get into phase 4 or get into phase 5? Well, if phase 4 is established, okay, at that point I will be cashing out my original investment in all my coins except Bitcoin. Okay, again, this is based on my risk appetite, but given that Bitcoin has taken this gold 2.0 narrative, Bitcoin is no longer a speculative asset for me. I see it as a long-term savings technology. So therefore, I'm not looking to cash out and profit take for Bitcoin. This market cycle, it's a long-term hodl, as they say, for me, for this market cycle. Okay. Again, this might not necessarily be appropriate for everyone else, but that's my view based on my view on risk. Okay. And as I just said, Bitcoin is an incredibly powerful sink and hedge for what's happening in the global macro environment. So cashing out to fiat for, when it comes to Bitcoin, for me, doesn't make sense. But again, others might have a different view and their circumstances might be different, so that might not be appropriate for them. Okay, so phase 4, it's all about cashing out your original investment. What you then are left with is pure profit. Okay, so in a way that helps with the emotions as well. You've got no downside now. It's all upside from here on in. Then when things get to phase 5, okay, and phase 5 is based on the Bitcoin indicators, when the net unrealized profit and loss goes to 75 and the thermocap goes to 40. At that point, then I will be cashing out most of my altcoins to stable coins, okay? And that will be a full cash out. 100% of what I'm invested in most altcoins will be cashed out to stable coins, okay? Again, I'm not advocating that this is appropriate for everybody. You need to understand that there may be tax implications in your jurisdiction by doing this. So, it may not necessarily make sense for you to cash out 100%. It may not necessarily make sense for you to cash out to stable coins. Okay, so you need to look at how this will apply to you, but that's what I'm doing. There are other altcoins that I won't necessarily be cashing out to or 100%. So I may only partially cash out to fiat or stable coins. Okay, and the reason why is that they are currently generating passive income, or I plan to use them to generate passive income. So for example, there's Cardano. I'm staking my Cardano at the moment, and I'm generating a nice return based on the value of Cardano that I'm staking. Okay. Similarly with Theta, I'm running a Guardian node and an Edge node, and that's generating T-Fuel. So there's not necessarily an incentive for me to lose that passive income, so I may not cash those out. But suffice to say, the majority of altcoins that I'm in, they will be 100% cashed out. Okay, so once I've cashed out, what then? Okay, well, there are a few options available. The one that interests me the most is looking at decentralized finance. Getting involved in liquidity provision on decentralized exchanges could be used to generate revenue or a return on the stable coins. There may also be opportunities to use a centralized finance platform like BlockFi, which also then allows one to generate a return on the stable coins. You could also convert to fiat and then purchase alternative assets like shares. But all of this is really just to buy time and make your money work for you while you wait for the market sentiment indicator to mature into a bearish sentiment. Okay, at that point, then you will re-enter the crypto market and start the cycle again. Okay, so you can create growth on the returns that you've generated for this market cycle. And hopefully, you will see the kinds of returns that we are generating. Hopefully, if this can be replicated, you will create intergenerational wealth. Okay, so a little bit of commentary from me on that one. I personally don't use centralized crypto savings platforms like BlockFi, and that's just given my personal risk appetite based on counterparty risk. But I will say that these platforms like BlockFi and others do offer much better returns than if you were to just convert to fiat and put that into a savings account. So there may be others out there who wish to receive a return on their crypto while waiting for the bear market to mature, and centralized platforms like BlockFi do offer a good opportunity to do that. What I plan to do once I'm cashed out is to devote most of my time to developing a thesis for the next market cycle and to do fundamental analysis on new and emerging altcoins. Okay, and the aim there would be to build up a narrative for the 5 phases for the next market cycle, and then also to update my greed and fear index for altcoins. Okay, so that would be I guess homework for me during the bear market. In the meantime, I will also look for opportunities to maximize passive income generation. As I said, things like running nodes for platforms like Cardano or Theta, they offer those kinds of opportunities, and then liquidity provision for decentralized exchanges. In the past they've offered good opportunity to generate a return, and I think this is an area that's only going to grow and become more popular as cryptocurrency as an asset class begins to move into ascendancy. Okay, so hopefully that gives you a appreciation of our dashboard. As I said, if you're interested in more detail about how it works and what it has to say on a weekly basis, use our link that we provide in this episode and join our Signal group. It's free of charge, and as I said, you receive that on a weekly basis. Of course, the disclaimer, as always, applies. You use that at your own risk. Okay, so to round things off, I just thought I'd share with you some portfolio performance to date. I started investing in cryptocurrency in May last year. So the returns that I'm sharing with you here is returns that were generated in less than a year. Okay, assuming a initial investment value of $1,000, my portfolio at the moment has achieved an unrealized growth of $8,269, which then translates into an unrealized profit of $7,269, and therefore an unrealized return on investment of 727%. Okay, not too shabby. I will say that we use the term unrealized because that hasn't been converted into fiat yet. And if the market were to crash tomorrow, those returns will not look like that. Okay. I thought I'd also share with you my top 3 performers and my bottom 3 performers. Okay. So what goes into that 727%? I've got 2 altcoins called Symbol and Uniswap, which have incredible performance, 22,000% and over 10,000%. Now, unfortunately, those were received as airdrops, and that's why the returns are so sky high, because essentially for the cost of a transaction, which is about $10 or $15, I received crypto for free, essentially. Okay, and that explains the incredible ROIs. But my third best performer, Theta, you'll see is a return of some 2,900%. Okay, and that was based on actual investment. Now again, if you go back to episode 4, where we did an example of a fundamental analysis, we used Theta as our example. So you'll see there how we generated that 3,000%. Okay, but not everything is sunshine and rainbows. Some of our coins have not performed very well. So you'll see our bottom 3 performers are Tyrion, SeekVR, and Ethverse, and there we received negative returns of 82, 69, and 63%. However, the portfolio as a whole, despite those negative returns, we've generated a significantly impressive, I would say, return on investment when compared to perhaps other asset classes. Okay. Again, there are others out there in the market who've got much better performance than what I'm showing here. I'm just trying to illustrate what's possible. I expect before the market matures that that type of performance will be improved upon. Okay. So with that being said, I'd like to thank you for, I guess, your attention and, walking the series with me. I hope that you found it interesting. We do plan to issue further content, so hopefully you'll subscribe and join us in our journey through this market cycle. I think it's going to be an incredible ride. The start of this year, certainly woke the world up to Bitcoin and to crypto, and things are only going to get better. So if you are invested in crypto, I wish you the best of luck, and hopefully the information that we've shared here would be of some use to you. Okay, well, that's it. Thank you very much.